It is pen and pencil time. Let's get into some education and talk a little bit about strategies. We've had a lot of questions of late for people looking for strategies that they can start their trading careers with. So here's what we're going to discuss here, guys, coming up. Why you should keep it simple, make it structured. Yeah, keep it simple, stupid. We put 2 S's there. Make it structured. You have to have very clear, defined rules that you set your trade off of, and that way you can follow the results as well. Let's get into strategy number 1, because we're going to do a whole series on this, guys. So stand by for multiple videos on new strategies that might be, new to you, but not new in general, but a good way, guys, to kick off your trading journey.
Yeah, absolutely. And when we say keep it simple, stupid, KISS. Keep
it simple, simply, we should have said.
I know, it's keep it simple, simply. Either way, when we say that, we really do mean it. And that means quantifiable. You want the strategy to be easily quantifiable so that you can replicate it, you can record your results, and there's no ambiguity. You know where to get in, you know where to get out. It's a little bit easier to stick to your rules. And that's why we talk about the opening range break. And there's a lot of ways to apply this. I think you can sort of look at pre-market level breaks as well in that regard. I'm going to use Virgin Galactic as an example. It was in the news because they reported earnings. It was not as bad as everyone was expecting. That's why they're up on the session. But like a lot of names at the open, it did have a bit of a failure. So if you were looking at a pre-market level break to the downside, you would have gotten it at 1975, and that's fine. What I want to talk about is the opening range. Now you had this push up to about $20. Now, there's one wick up here to 2020, but realistically, you have the real body up here at 20 even that ends up holding. And then you get a wipeout bottom to the pre-market low, and then a consolidation right at that same 20 level. That gives you a clear entry point. Your true opening range is at 20. It's been confirmed by consolidating. It's now 10 o'clock, and then it breaks out just after 10:10. So the opening range got put in. It tried to press lower. It rejected that break of the pre-market lows, and then consolidated with the same range. The opening range top at 20 even, and then the pre-market low as its support level, and then it breaks out clean at 20 even. Even if you took the wick high at 20.25, same thing. It's a clean break. In both those cases, you can have a stop at the previous pre-market low if you like it, and then you know where to get in, you know where to get out. And that's the kind of thing that we're talking about. Has a catalyst. It's got an obvious opening range that you can play with. Once 10 o'clock hits, it's been identified. And whether you apply that to 9:45 or 10 o'clock, as long as you let it make that range, confirm it with that consolidation, and then look for the break, that's the kind of trade I like.
Yeah, I mean, I really like this. Keep it as simple as possible. And I think that, I don't know. I was just looking here at Palantir today. And honestly, I'm going to use this example from yesterday because I want to give you something that's super clean and super easy to follow, okay? I think that a lot of these rules, they don't really matter too much if there's news catalysts, okay? You have to understand that we need a catalyst to trade something, but at the same time, if you follow your rules and you get the volume to go, then, you can have a winner. And look at yesterday, Palantir, right? I'm not going to count today because we're down 9%, but heading into yesterday, you basically were trying to break out. We had earnings coming today, and so Palantir right here, looking at 26.27, right? So if we look at the daybreak, we know we want to get long. I mean, look, this is just a minute chart. Nice movement here into the close, nicely upside there, $26 trying to break out. So then you have this bar coding happening in the pre-market. This goes back to 7:30 all the way to 9:30. Palantir, and this is how you can tell, it's stuck in a range. It's not moving. And this is what I mean by, not playing this kind of a play on earnings day where you're going to get, like maybe a 10%, 15% move just alone in the pre-market. Then when you take the break, it's already up 15, 20%. So that break may or may not happen. It's still a good strategy. But look at this, Palantir bar coding, and then you get this 26.30 break. I remember this clear as day. It was actually on our sticky note. That's how easy it was. So we had that break right there. It takes it out right away off the open. It actually dips down a little bit. To take it to a little bit more at advanced level, you get this dip down into a pre-market bottom and it holds. So not only do we have 26 as an out, but we also have this 26.30. So down, hold the bottom, take out the top, and giddy up to the upside. Look, you take this 26.30 long, guys, your upside is literally $1 more than that. I mean, a little bit less than $1 as we break through 27 and go to 27.11. But your downside risk is only 30 cents or the bottom of this candle. So about a 20 cents worth of risk for an upside break there. This is the opening range break on Palantir, and I think you can use that on many stocks.
And the key here, obviously, guys, is we have to have defined rules, as we said, have a defined time frame, and go do your homework. Make sure you're back testing. Make sure you're coming up with those defined rules, and then follow those forward into forward testing before you obviously take it live. But a very, very simple strategy that you can put to work almost instantly with a little bit of homework. That was the opening break strategy.